What is an offer for sale? An offer for sale is a mechanism in the stock market where existing shareholders, typically promoters or large investors, sell a portion of their shares directly to the public through a bidding process on the stock exchange. Key points about an offer for sale are: selling existing shares. Unlike fresh equity sales where new shares are created, OFS involves selling shares that are already in existence. Promoters/large investors. The sellers are usually promoters, company founders or major shareholders, or institutional investors with significant holdings. Transparent. The sale takes place through a transparent bidding process on the stock exchange. Floor price. The seller sets a minimum price, floor price, at which they are willing to sell their shares. Bidding. Investors can place bids at or above the floor price. Allocation. Shares are allocated to successful bidders based on the bid price and quantity. Here are the 6 key points about an offer for sale. Now, what is the purpose of an offer for sale? Number 1 is promoter stake dilution, to comply with regulatory requirements on minimum public shareholding. 2 is liquidity, to provide liquidity to existing shareholders who want to sell their shares. 3 is capital raising. In some cases, the company itself may conduct an OFS to raise funds, although this is less common than promoters using it for their own purposes. Now, what are the advantages of an offer for sale? 1 is simple and efficient, a quicker and easier way to sell shares as compared to other methods. 2 is transparent. The bidding process on the stock exchange ensures transparency and price discovery. And 3 is market participation, allows wider participation from retail and institutional investors. What are the disadvantages of an offer for sale? Point 1, potential price impact. A large OFS can put downward pressure on the stock price. Point 2, limited control for sellers. Sellers have limited control over the final price as it's determined by market demand. How is it applied in the real world? If a promoter of Google or Apple wants to sell some of their shares, they can do so through an OFS. They would set a floor price, and investors can then bid for these shares. The shares will be allocated to the successful bidders.